All right, welcome back to Squawk Box, everybody. Joining us right now is Fundstrat's Tom Lee. He's also a CNBC contributor. Why don't we talk a little bit about where the markets stand overall right now? Because we're looking at both the S&P 500, the NASDAQ, and the NASDAQ 100 all closing at new highs again on Friday. It's the best quarter for technology since the second quarter of 2020. What's happening, and how do you see this playing out?
Well, this is still the most hated V-shaped rally. And it, of course, has a lot to do with when stocks fell in a waterfall decline into April. Nobody likes to be sitting on stocks, so a lot of folks liquidated at the lows. But we know that whenever the VIX is above 60 and falls below 30, you've made a decisive low. And now visibility is better. You know, tariffs aren't as bad as we expected, and the inflation impact actually has been very muted, and actually outside of tariffs, underlying inflation's actually much lower than people expected. And I think the Fed is, even if they're holding now, the bond market doesn't believe it. If you look at the 2-year, they think the Fed's 2 cuts behind. The 10-year is now down to 4.2, which means the Fed can be more dovish in the next 12 months, and that's a tailwind for stocks.
Can you explain how we have this big, beautiful bill, which people are saying $3.3 trillion added to our deficits and everything else, and yet you're looking at the 10-year coming down?
Yes. It shows you that markets don't view the U.S.'s debt sustainability purely as its budget, you know, because I think there's a lot of hidden value on the U.S. balance sheet, from natural resources to buildings they own to the value of gold is undervalued. And in a way, when people say the U.S. can't find buyers of its treasuries, it's actually finding it. It's going to be stable coins. Stable coins are going to replace any foreign holder of treasuries, because
is that a temporary situation? Like once you do that to a certain level, then sort of living in its own universe?
True. It depends. I mean, stable coins are 250 billion today. You know, the total circulating supply of dollars is in the, you know, nearly 10 trillion. So stable coins can grow. A lot of stable coins transactions happen outside the U.S. So dollar dominance could actually be much higher in a stablecoin world. But you know, right. The main thing is it's at 4.2% the 10-year. And I think that means the bond market isn't as concerned. I mean,
right, but we thought that the bond vigilantes were going to say, no mas, we're not doing this.
Yes. I think the bond vigilantes are essentially correct. The U.S. should not be running a deficit like this. But for whatever reason, we're not at the levels yet where debt sustainability is a question.
Could that change? I mean, it's weird. When these sentiment changes come, they usually come without warning.
That's right. Bond markets run on confidence. So there may be a moment where the bond market loses confidence. As long as the dollar is...
I mean, Jamie Dimon's worried about that.
Yeah, and you should pay heed to Jamie Dimon, because he has his finger on the whole economy.
Where you still look at your year-end target is at 6,600 still? So that's up about 8% from where we closed on Friday?
Yeah, I think that the reason people don't think there's more upside, I think there's upside to 6,600, because the PE of the market can go up a lot. We already had 5 shocks. We had the COVID shock, the supply chain shock, the inflation shock, the Fed fastest hikes in history, and then we had the tariff shock. So 5 shocks in 5 years.
5 years, yeah.
And earnings kept growing. If this was like a stock, we'd say, look, if you tried to kill it 5 times and it still grew earnings, we would put a much higher multiple on it.
Jim Chanos was talking on Bloomberg the other day and said that what we're seeing right now in AI reminds him of a lot of ways in the dot-com bubble. Now, the numbers and the earnings are very different, but he was talking about the Ciscos and the Lucents and some of those companies that were selling the things to shore up the internet. And I think he's looking at all of the CapEx spending that's taking place and saying it's great for right now, but it could change drastically and relatively quickly, too.
Yeah. You know, I was a tech analyst during that time. I think it's very different. You know, we have to remember the internet boom was companies like Yahoo creating web pages that were raising venture capital funds to create web pages. So the purchase of the equipment was based on like creating web pages.
Right.
AI has use cases like replacing workers. So you have true dollars for a company to measure how much they're saving. And so until we get to the point where AI doesn't save you any money,
Right.
then it's a bubble, but
Because
maybe
there
it's
are use
undervalued.
cases right now, and it's not just about selling to the consumer and getting people to pay you to basically give stuff to the consumer for free.
That's right, and it's almost like magic is happening, right? ChatGPT, people have remarkable experiences. Some of these people are using it as a therapist. Nobody in the early internet days was saying the web pages worked great everywhere. It was actually, people were just building web pages to nowhere.
If it's true, though, that it can actually replace worker or worker hours or worker jobs, is there a point that you worry about what happens to the economy if people lose their jobs en masse? There was one of the AI CEOs who said he could see unemployment going from 4.2% to 20%.
Yeah, there's going to be huge distributional consequences. This is like, instead of China of the 80s, this is like another species replacing human workers, right? Robots. So I think that that's a societal question where, what do we earn wages for? Because if it's for output, this PhD worker that may be also like a 300-pound robot that could do anything is going to be a better worker than us. And so I do think it's important for us to really create a new benchmark for what is achievement and what we should be focused on. And it could have a positive outcome. We could be focused on, betterment of society.
Yeah, I guess that comes down to it. There are some people who are advocating for a 4-day work week, which is interesting.
Yeah.
But traditionally, if companies are finding ways to spend on this, they want to save the money, not just redistribute it to the workers.
That's right. There may be few. So we may have retirement age at age 39 now. But then if robots are producing food, we won't have food shortages, right?
Right. Tom, thank you.
Thank you.
A great optimist, always.
돈 벌리게 불어나라 내 money